Welcome to this week's edition of the GCV Weekly Briefing, where we break down the latest trends shaping the economic landscape. In this episode, we'll explore stagnation in the UK housing market, new recommendations for boosting pension fund investments into private capital, a £10 billion UK-Asia partnership, and the impact of the new US import tariffs. These developments are shaping opportunities for investors and businesses alike. So let's dive in. The UK housing market hit a plateau in March, with the average home price holding at £270,000. This follows a 0.4% increase in February, while annual growth stood at 3.9%. But not all regions are experiencing the same trend. Northern Ireland surged ahead with 13.5% increase, its fastest since 2021, while London saw the weakest growth at just 1.9%. This slowdown aligns perfectly with the expiration of the stamp duty holiday at the end of March, leading to a rush of completions beforehand. As Nationwide's chief economist Robert Gardner points out, this pattern is typical after tax breaks. Buyers accelerate purchases to avoid additional costs, which temporarily softens demand. Adding to the cooling market, mortgage approvals have dropped to a 6-month low in February, as many buyers rush to complete deals before that deadline. Looking ahead, financial markets anticipate 2 rate cuts from the Bank of England this year, with a 68% probability of the first coming in May. If borrowing costs drop, affordability could improve, gradually reinvigorating demand. Tom Bill from Knight Frank expects a reset in April, as an increased supply may put downward pressure on prices in the short term. He explains, buyers coming back into the market have re-leveled the playing field and will find supply is strong, which should keep downwards pressure on prices. However, uncertainties remain. Erratic US trade policies and employer national insurance changes could keep borrowing costs elevated for longer. Moving on to our second story, a panel of pension and private capital experts is calling for changes to encourage UK pension funds to invest more into private capital. One key recommendation is for the FCA to review the long-term asset fund framework as more funds enter the market. Long-term asset funds, or LTAFs, allow pension funds and individuals to invest in illiquid assets. Industry interest is growing. Aegon Asset Management and MG Investments have already launched private credit LTAFs. Regulatory changes are also on the table. The panel is pushing the FCA to amend permitted link rules, which currently limit DC pension schemes from investing in private capital. They argue that loosening these restrictions would enhance diversification. Beyond regulation, the panel proposes a government-backed programme to direct more investment towards venture capital. This would include a funds of funds vehicle, a marketplace for DC schemes, and a directory of private capital funds. Phoenix Group has already taken action, committing $2.5 billion over the next 3 years through Future Growth Capital, a joint venture with Schroders that aims to channel up to $20 billion into private markets by 2034. Kerry Baldwin, chair of the expert panel, highlights the significance of government backing. Government has the opportunity to build on this growing momentum with a new programme informed by what pensions and private capital leaders believe will make a difference. As pension funds explore new avenues for investment, international capital is also playing a key role in shaping the UK's economic future. In a major boost for the economy, the government has secured a $10 billion investment deal with Singapore's Overseas Chinese Banking Corporation, or the OCB for short. This deal follows the UK's ratification of the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, a trade pact expected to contribute $2 billion to the economy annually. This agreement also strengthens UK-Asia-Pacific collaboration, aligning with the government's industrial strategy. The OCBC's presence in the UK is growing rapidly, with its London branch now largest in its global network. The bank has already played a major role in financing renewable energy, real estate, and infrastructure projects. Minister for Investment, Poppy Gustafsson, calls this a significant milestone. This is a major vote of confidence for the UK economy. The investment will support infrastructure and clean energy while creating high-skilled jobs across the country. Elaine Lam, OCBC's head of corporate banking, echoes this statement. The UK and Singapore share a historically deep tie, and the OCB is proud to play a part in further strengthening this relationship. With this partnership in place, the UK is positioning itself as a prime destination for investment from Asia. Across the Atlantic, new US import tariffs are set to shake up global trade. President Trump has imposed a 10% baseline tax on all imports starting April 5th, with additional tariffs targeting 60 countries beginning April 9th. The administration claims that these tariffs will protect American jobs and manufacturing, but businesses warn of rising costs. Importers will likely pass the expenses on to customers, potentially driving up inflation again. Economists are also concerned about retaliatory measures from major trade partners. Past tariffs under Trump led to countermeasures from China and the EU, escalating trade tensions and disrupting supply chains. The timing is critical. Both the UK and EU are working to stabilise economic ties, while protectionist rhetoric intensifies in the US election cycle. A White House official acknowledges the risks but defends the policy. These new import taxes will send economic shockwaves around the world, but they are necessary to address trading imbalances that protect American jobs. With global trade relationships on edge, investors and businesses alike will be watching how these tariffs unfold. Well, that's all for this week's weekly briefing. From the shifting UK housing market to pension fund reforms, a major UK-Asia investment deal, and the impact of US trade policy, these developments will have lasting effects on the market and investors. We'll be back next week with more insights into the evolving economic landscape. Thank you for listening, and I'll catch you next week.